Bonds, stocks, and real estate, offers, tips, and advice. Introduction. We're going to break down how each asset works, their key features, and offer practical tips you can apply. Whether you're based in Kenya investing in treasury bonds or Nairobi property, or you're exploring global stocks and REITs, these insights will help guide your investment journey. Let's get started by exploring bonds, often seen as the more stable side of investing. Bonds, lending money for stable returns. Bonds are essentially loans you give to a government or corporation. In return, you receive regular interest payments, known as coupon payments. At the end of the bond's term, called maturity, you get back your original investment. For example, in Kenya, the Central Bank of Kenya, CBK, regularly issues treasury bonds. Globally, US Treasury bonds and UK gilts are popular for conservative investors. Bonds, features you should know. Interest rate, coupon, the annual income paid as a percentage of the bond's face value. Maturity date, the exact date when your principal investment will be repaid. Credit rating, a measure of the issuer's ability to repay. Higher ratings mean lower risk. Types of bonds. Government bonds, e.g., Kenya infrastructure bonds, US Treasuries. Corporate bonds, issued by companies to raise capital. Municipal bonds, offered by local governments, more common internationally. Bonds, practical tips. Always check the credit rating. Go for high-rated bonds if you want lower risk. Match the maturity to your needs. Long-term goals? Choose longer-term bonds. Diversify your holdings. Combine local government bonds with global corporate bonds to spread risk. Example, a Nairobi-based investor might hold both a 10-year Kenya infrastructure bond and a 5-year corporate bond from Safaricom. Stocks, ownership with growth potential. Stocks represent ownership in a company. When you buy a share, you're literally buying a piece of that business. Stocks can deliver returns in two ways: capital appreciation, price increases, and dividends, profit sharing. They offer higher growth potential but come with higher short-term risk. Example: Kenyan stocks like Equity Group and Safaricom. Global giants like Apple, Amazon, and Tesla. Stocks, features you should know. Shares, units of company ownership available on a stock exchange. Dividends, cash or stock payments made to shareholders from company profits. Types of stocks. Common stock, voting rights, variable dividends. Preferred stock, fixed dividends, less risk, but no voting rights. Market capitalization, the total value of a company's shares, e.g., a large cap like Microsoft or a mid-cap like Kengen. Stocks, practical tips. Research before investing. Know a company's fundamentals, leadership, and business model. Diversify your stock portfolio. Spread your money across industries and geographies. Think long-term. Short-term volatility is common, but stocks historically perform well over time. A Kenyan example, mix Safaricom, KCB, and EABL. International mix, combine Google, Toyota, and Alibaba. Real estate, tangible, long-term investment. Real estate is a physical asset. You own land or buildings. You earn returns through rental income and capital appreciation. It's seen as a long-term investment that adds stability to a portfolio. Example: locally, buying an apartment in Nairobi's Kilimani area for rental income. Globally, investing in a property in Dubai or through REITs listed on the NYSE. Real estate, types and what to consider. Types of real estate investments. Residential, houses, apartments. Commercial, offices, retail outlets. REITs, publicly traded companies owning income-producing properties. What to consider. Location, e.g., proximity to highways, schools, business zones. Property value and future appreciation. Rental income potential and average occupancy rates. Costs, taxes, maintenance, insurance. Real estate, practical tips. Conduct due diligence. Inspect the property and check land ownership documents. Explore financing. Compare mortgage options from Kenyan banks like ABSA or Equity. Prepare for hidden costs. Include insurance, renovation, taxes, and even periods with no tenants. Example, a 2-bedroom apartment in Nairobi may yield 7 to 9% annually, but vacancy rates could vary depending on location and economic conditions. Comparing the 3 investments below. This table provides a simplified comparison. Keep in mind, actual performance depends on the specific investment, market timing, and economic trends. Choosing what's right for you. There is no one-size-fits-all investment strategy. Your choice depends on financial goals, e.g., saving for a house, retirement, children's education. Risk tolerance, how much volatility you're comfortable with. Time horizon, how long you plan to invest. For example, a young Kenyan professional may favor stocks for growth. A retiree may choose bonds for safety and income. A long-term investor might prefer real estate for capital appreciation. Diversification, your best friend. Diversification is about not putting all your eggs in one basket. By combining bonds, stocks, and real estate, you reduce overall risk. One asset may fall while another rises, balancing your returns. For instance, if the Nairobi real estate market slows, your Safaricom shares or treasury bonds might still perform well. Globally, if tech stocks dip, your REITs or government bonds can help cushion the impact. Key takeaways. Each asset, bonds, stocks, and real estate, offers unique benefits and risks. Understand the features, returns, and risks before making a decision. Always align your investments with your financial objectives, comfort with risk, and investment horizon. Diversification is a critical part of any strong investment strategy. Closing remarks. Thank you for watching. Whether you're investing locally in Kenya or diversifying globally, remember to stay informed, stay diversified, stay aligned with your long-term goals. Keep watching our financial education series for more practical tips on building wealth and securing your future. Until next time, invest wisely and let your money work for you.